A health savings account is a powerful way for you to save for retirement. I've talked about them in the past and called them a super Roth or a medical IRA, and that's because they give you significant tax benefits when it comes to paying for your medical costs when you're retired. But one of the questions I was recently asked is, can we use our health savings account to cover the cost of our health insurance premiums? And so that is the question I want to talk about in today's video. When can you use that health savings account to pay for health insurance premiums? And it's not all the time. Now, let's back up a minute and talk about what a health savings account is. If you're on a high deductible health insurance plan, then you have the ability to save in a health savings account. The money goes in before tax. The money grows without any tax on it, and it comes out with no tax on the distribution if you use that distribution for qualified medical expenses. Now, qualified medical expenses tend to be those that you could itemize and deduct on your tax return, but health insurance premiums are one that the IRS says are not a qualified medical expense, with 4 exceptions. And I'm going to focus on 3 of those exceptions today. The one exception I'm not going to talk about is if somebody is unemployed and they're receiving unemployment benefit from their state, they can use their health savings account to cover the medical health insurance premiums during that period of time. Not going to focus on that. Let's talk about the other 3 exceptions because those could apply to you at retirement. Now, my couple that has just retired are not yet 65. And so they're going to go on COBRA insurance for 18 months. And then they're going to have a gap period of a short period of time where they're going to have some private insurance. And then they'll hit age 65 and they'll switch to Medicare and they'll buy a Medigap plan at that point in time. The Medigap plan is the supplemental insurance that helps cover some of the out-of-pocket expenses under Medicare. They do have a very nice health savings account. They've saved to this over the years. It's grown very nicely. And so they could use that health savings account to cover those premiums if it's allowed. So let's talk about what is allowed. They are allowed to use the health savings account to cover the cost of COBRA. Now, they can either pay the COBRA themselves and then get reimbursed, or they can have it come directly from their health savings account, whichever ends up being the best for them. Once they switch to that private insurance for that short period of time, before they hit Medicare, then they will have to pay that out of pocket. They cannot use their health savings account to cover that private insurance. When they switch to Medicare, then they can use their health savings account to cover their Medicare premiums. So if they had to pay a Part A premium, which they don't, they qualify to have that free, and then the Part B premium and the Part D premium, those Medicare premiums are a qualified medical expense under a health savings account. They will also get a Medigap plan at that point in time. And they're likely to go with either a Plan G or a Plan N because that is the most robust plan. That's also going to be the most expensive plan. But they're not going to be allowed to use their health savings account to cover the cost of the Medigap plan. That they have to pay out of pocket on their own. The other thing that they can use their health savings account for is long-term care. If they have a long-term care insurance policy, they can use the health savings account to pay for those long-term care premiums up to what is the qualified long-term care amount that could be deducted on your Schedule A. And so this year, 2024, just looking at my handy dandy chart, if you're 41 to 50, that's $880 a year. If you're 51 to 60, that's $1,760 a year. And 61 to 70, it jumps to $4,710 a year per person. So they could pay for some or all of their long-term care premiums if that was something that they decided they wanted to purchase from their health savings account. Those are the only insurance premium costs that are allowed to be covered from a health savings account. Now, the question then becomes, should they use their health savings account to cover those expenses? And that is a different analysis. We want to keep in mind that they are allowed to reimburse themselves for out-of-pocket costs down the road. So if they keep proof of their cost of medical expenses, then they can reimburse themselves later. This will allow the health savings account to continue to grow with no tax on that growth and allow it to build up even a greater value in order to have more money that they could use later in retirement to cover those medical costs. And that could become very important when they hit required minimum distribution age, because at required minimum distribution age, they're going to have to start taking money out of those IRAs. That's going to increase their taxable income, and it could increase their cost of their Medicare because it could push them into one of those IRMA brackets. At that point in time, if they use the health savings account to help cover some of those costs, then that could give them some income to pay for the medical without dipping into some other accounts that would be taxable to them. That could help bring their adjusted gross income down. It could help reduce their taxes across the board and help them have a lower or no IRMA cost depending on their situation. So that's an analysis that has to be run and looked at to say, what makes the most sense in your situation? When should you use this health savings account? And how should you utilize it to get the most tax benefits for you and for your family down the road? So you want to look at that in your own situation. And if you haven't run a plan, you should run a plan, run the numbers, know what it's going to look like in the future. Don't make a decision just based on today and this year. You want to make a decision that takes into account your retirement and the different phases in retirement so that that decision is good for today as well as down the road when you might need more tax-free income. So hope that's helpful. If there's anything that I can do to help you, then feel free to send me an email. I get those directly. And be sure and subscribe to this channel so that you don't miss out on some future good topics to share to help you be on your best path in your retirement.